you might have, say, let's say an $800,000 loan on your owner-occupied property. Maybe it's worth $2 million. You got in, 15 years ago. So you got lots of equity, but you got $800,000 loan, not much super. Say you're a self-employed fencer or plumber or some sort of, business. And you're like, well, I don't have any super. In 10 years, I'm going to be 60. I don't want to be working super hard the rest of my life. Well, how do I get rid of my $800,000 loan? I've got the equity, but I don't want to sell. I want to have, grandkids chasing the grandkids in 10 years around the house. I don't want to have to sell. I don't want to move out of this location, Northern Beaches or wherever it may be. And it's like, well, I've only got 10 years left. How do I pay back $800,000? It's nearly impossible. And you say, well, one common strategy that this isn't my invention. It's been around a long time, this sort of thinking. But, well, if you buy an investment property of $800,000 and it doubles in value over the next 10 or so years, well, then you can sell the property, and there's the capital gains tax and whatever else. Maybe you won't get, $800K of profit, but even if you end up getting $600,000 of profit or whatever, that's going to pay off 75% of your loan. And then, but in 10 years, you'll probably pay off around, you probably pay the remainder anyway of the principal. Yeah. So you can literally pay off your home in 10 years. Yeah. And then by the time you're 60, at least your home is paid off. So even with even if you end up just having pension income, at least that's sort of, maybe you can survive off that if you've got a home outright versus having a huge loan at 60. Well, it's like, what do you do then? It's sort of, you just got to keep working. If you want to semi-retire, it makes it hard.